Central Bank of Nigeria will rigorously oversee the banking sector recapitalization to thwart illicit funds. Haruna Mustafa, Director of Financial Policy and Regulation Department at the CBN, outlined this in the circular to various banks, including proposed ones. The directive aims to enforce a new minimum capital requirement. The CBN, in conjunction with law enforcement agencies, seek to guarantee that funds raised during recapitalization are clean and devoid of illegal origins. This concerted effort underscores the commitment to maintain integrity and transparency in Nigeria's banking system amid the recapitalization process. And to help unpack this, I'm joined by an economist and senior manager at PwC Nigeria, Abiodun Kayode-Alli. Good afternoon. It's a pleasure to have you join me.
Good afternoon. Thank you for having me.
Now, some of the bankers expressed concern that while the central bank prefers them to retain most of their earnings to reinforce their capital base, it should not, prevent them from from counting these undistributed earnings as part of their capital. Do you think the CBN might, in sort of some ways, rethink this aspect of its guidelines?
Yeah, thanks, Dan. That's a very good question. Truly, that's the concern of some of the banks that we have. In a straightforward and simple way to answer it, I'm not sure the CBN would budge to that request by the bankers. And the reason why I don't think so is because what the CBN is actually looking out for is fresh capital injection. So the CBN has said that they shouldn't bring forward equity owners, retained earnings, basically, right? Reserves by equity holders. So if you consider it, the CBN is interested in capital, fresh capital, as opposed to earnings from profits being made. What the CBN is trying to do in a nutshell is to avoid a situation whereby some banks already have hit that particular capitalization policy even before it took effect. Because if you consider the retained earnings of some of the tier one banks, they already have crossed that threshold. They've crossed it entirely. So to avoid banks using retained earnings, the CBN would rather prefer a fresh capital injection. And it has given suggestions on how these banks can actually go about its true rights issues, private placements, or going public through public offerings. So I think these are some of the things that the CBN will still stick to. I don't think the CBN would give them that leeway to make use of retained earnings.
Well, let's talk about the downsides of this communique. What impact would it have negatively on the banks in Nigeria?
Okay, yeah, and that's a very good question. Even though the actual reason behind this policy is to ensure a sound and stable financial system and a strong one that can withstand shocks, like you said, there might be some downsides, even though it might not be as significant as the pros. Some of the downsides that we can see is, first of all, local investors, they are faced with the local challenges, right? With respect to inflation, with respect to high cost of doing business, right? So they might not have that additional capital to invest in these banks. So the next thing or the next place these banks can turn to will be foreign investors. Foreign investors themselves, they are looking into what is going on in the economy. They don't want a situation whereby they will bring in their capital at maybe a certain rate, and by the time they are taking it out, the capital has depreciated in its value. So that's one challenge that we have there. Another challenge that might occur is based on the impact of banks not meeting up this threshold. If some of these banks are unable to meet up with this threshold for their current license arrangements, what we're going to see is that they are going to have a downgrade. And if there is a downgrade, there might be instances where there might be losses of jobs. So I'll give you a good example. Where some national banks now have to meet that minimum capital of 50 billion and they are unable to do so, they might downgrade to regional banking, which means that they don't cover the entire nation, right? So it means that in those areas whereby they no longer operate, those who are working there as bankers would have to find alternative jobs, right? So these are two quick downsides we can see from this policy.
Well, thank you so much for sharing your insight on the news. Abiodun Kayode-Alli, Senior Manager at PwC. Thank you once again.
Thank you.
And that's the end of today's edition of Business Edge. You can visit our social media handles at News Central TV and also visit our website www.newscentral.africa, and equally download our mobile app on App Store and Play Store. I'm Likon Obanjo. Enjoy the rest of your day.